Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 5th. We got a few economic news releases to go over today, so we'll jump right into it. We'll start with the weekly jobless claims that we get every Thursday. So last week we had 272,000 people apply for unemployment. Forecast for this week is supposed to dip a little bit to 265,000. It came in a little bit lower at 260,000. Of course, this is on the heels of tomorrow. We'll have the Bureau of Labor Statistics job numbers, the non-farm payrolls. Tomorrow. So we'll touch on that 1 second here, but let's kind of finish this up here. We got the factory orders out of August. So back in July, it dropped 3.3%, but August is supposed to rise to 1.1. Came in a little bit hotter at 1.2%. So overall, decent news here. Weekly jobless claims is decent primarily because of the the hurricanes that people are still probably trickling in, applying for unemployment as they get kind of settled in after the after effects and everything. Also good news here, the trade deficit back in for August numbers. In July, we had a deficit of 43.6 billion. Forecast is supposed to improve to 42.6 and improve to 42.4 billion. So it did improve a little bit by 1.2 billion dollars here. Obviously, much better than going the opposite direction. So let's touch on this. Right now, stock market's up, and as we touch the Bureau of Labor Statistics is tomorrow releasing their job numbers, and that's going to be the big news for this week. Now, they're not expecting much because of the hurricanes. They're expecting approximately 75,000 new jobs. It could come in a little hotter. We're still kind of uncertain as to how mortgage-backed securities are going to be affected, but I'll touch on that once we look at the graph here. But again, it's kind of shaping up to be one of those important numbers, but it could be kind of shaken off a little bit because, again, it could be going into next month. But again, next month we start seeing the temporary jobs. We could start seeing those jobs picking up. So, again, it's going to be a little tricky tomorrow, but again, they're going to be looking at that pretty heavily, and it could help out the stock market. I think there's more upside for stock market than bond market, which I'll show you in a little bit. Today, the market will be taking a lot of its cues from the Fed speakers today. We have Harker, Powell, a lot of those guys out speaking today. Powell is also another person that's in the running for the Fed chair after February when Janet Yellen's term is finished. So he's another person that people will be listening to. But it's kind of sounding like it's pretty definite that they will be raising rates in December. They typically like to see, they already pretty much have it on the charts that they're going to do it, and unless something dramatically happens, it looks like that could most likely happen. Fed funds were up over 70% for it to happen. It'll probably rise after this next Fed meeting in November here. So this, as we touched on the bond market, as you can see, now we just dipped below the 100-day moving average. We got the 200-day moving down here. We're down about 14 basis points. So yes, rates did worsen today compared to where we were yesterday. As we broke below this 100-day moving average, it's going to push us into another level. And we I do think we could see a worsening again tomorrow. So just be prepared. I would kind of definitely want to lock in if you got short-term rates out there. If you're in short-term where you're going to be you'd be closing pretty soon. But right now, yeah, I think it's prudent to go ahead and lock in any loans you might have out there if you refinance or purchasing. So again, we got more side of pushing downwards than we do upwards as of right now. Especially when the news are kind of catering towards the stock market as they've been reaching new heights every single day here. Yes, they might get tired, but again, we're going into the fourth quarter, and that's the holiday season, and signs are pointing that the economy is kind of growing a bit and jobs are improving. So this here also kind of support sorry about that. Here's the treasuries. So as you can see, we've been up above this 200-day moving average here. We got more upside to rise, which is why I say there's more push for the bond market to go downwards. So I think we got a lot more room here, and this is proving to be a pretty strong floor. So we've tested quite a bit over the week, and it's resisted any drops. Right now we're about 230. We're up about 1 base point, so we're up about 2.34. We're approaching this 2.35 level here. So this is a kind of important level here. We haven't really been this high in a while, as you see, until January, and then they've dropped. But again, we're reaching those levels again. So just be very cautious out there. If you're out there in escrow trying to buy a house and you don't want obviously the higher rate, you may want to look into locking in now. Or if you're refinancing and want to close soon, you may want to look into locking now. So that pretty much wraps it up today. But if you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork. My handle is Mike Bjork, and you'll get more updates throughout the day. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow.